Hello everyone, and welcome to our next technical analysis review for the Euro US dollar pair. Today is December 8, 2011, and we are currently looking at our 15-minute chart. And as you can see, we have some strong price movements today. There was some strong selling in the market today, and it came as a result of some news coming out of Europe. Of course, many of you know that we had an ECB rate cut of 25 basis points. And we also heard some disturbing but surprising comments from the ECB president that drove the market into risk aversion for most of the day. So then we saw the dollar strengthen in this currency pair, and even some of our other safe haven currencies, strengthened as well. But we saw the strong selling take place during today. But before I talk about that, let me go on to talk about what happened during today's Asian session, or yesterday's Asian trading session. Now, as you can see, the market was very calm during Asia and trading within a tight range. And this is pretty much just the result of the market being indecisive. Many investors didn't know whether or not the European officials were going to be able to come up with some type of concrete solution and plan to deal with some of the issues coming out of Europe. In relation to their sovereign debt issues. So then, of course, you see the strong, tight trading, which is a measure of the indecisiveness and uncertainty, in the market. And there was a little bit of some movement that happened, but around the opening of the European session, around London Open, we did see a slide in the pair. We began to see it fall, and it actually fell towards this support right here, which actually was our daily pivot around 33.80. So we saw this slide down towards our daily pivot, and it remained there until the interest rate announcement around 6:45 a.m. my time, which is Central Standard Time here in the Midwest. So then, of course, right around that time, we had heard that the ECB had decided to cut their rates by 25 basis points, bringing the interest rate down to 1%. And this news actually caused a hike in the pair, a hike in the price of this pair. And the reason for that was because most investors believed that an ECB rate cut, or a rate cut, would be beneficial to growth. It would help stimulate and increase growth in the Eurozone. And this is what the market expected. This was the talk of the market, that there would be some type of rate cut of about 25 basis points. So then you can see that the market rallied, and if you was positioned properly in the market, you could have actually entered a buy order not too far from this daily pivot around 33.90, and you could have actually set your stop loss on the other side of this daily pivot point, this support, and you could have traded this up. And actually, you could have closed it out at the next approaching resistance, would have been at 34.24, 34.25, and it would have been a 34 pip trade. Or you could have held out to this trade and rode it all the way up to this historic resistance right here at 34.55 for about a 65 pip trade. So then you can see that this was, of course, historic resistance. This was an area where price reversed. So you could have closed it out there. But it was not only just historic resistance, but it was also a Fibonacci level, as you can see, at 34.55. Now, let me prove it to you. If I was to go to the 8-hour chart and show you that this drop from our high, from our October 27th high at $1.4248 down to this low, our November 25th low at $1.3212. The 23% retracement of this drop, the field retracement of this drop, was this resistance at 34.55, where my cursor is. So then let me go back actually to our 5 minutes. So as you can see, it stopped. Price rallied up to this level, and then it began to reverse from this level. But it was also right around this time when we had heard some statements released by Draghi that he was not going to expand their bond purchasing program to provide greater liquidity to European governments, and that he had no intention on helping the IMF fight the debt crisis in Europe. So then this was very disturbing and disappointing news to the market. So then we saw this massive sell-off in the pair, And as you can see from these candlesticks, there was strong momentum and selling, and it broke through most of these technical levels of support, and it continued to fall all the way down here to the 32.92 area. Now, if you had known that this 34.55 area was resistance, then you could have entered a short here, but it would have been pretty risky. And the reason why I'm saying that is because it was still during Draghi's press conference, and normally during his press conference, there's still a lot of volatility, and you never know what he may mention later that may also shift sentiment in the market. So it would have been really risky to enter a short here, but you could have, if you were an aggressive type trader, you could have entered here, and you could have actually held out this trade for about a 150 pip trade. If you would have closed it out here, you could have closed it out at the pivot point, or you could have held out and closed it out down here for about a 150 pip trade. But like I said, it would have been very risky. Now let me draw a fib of this drop right here, of the drop from this low at 32.90 up to this high right here. And as you can see, once price fell and hit this support down here at 32.90, it began to go through a correction. You began to see price rally, and it actually rallied up to our 50% retracement from this drop we had on today. So then it hit this area of resistance, and this resistance was also where our 200 simple moving average is. So you can see confluence in this area, and it was also near our daily pivot. So it hit this 50% retracement, and it began to fall. So then, of course, I'm expecting to see further consolidation throughout Europe, and some more probably dollar strength throughout the Asian trading session. So then that may be a possibility, or we may see some consolidation or range-bound trading until European Open, or until we hear some news from the EU Summit. So then that's primarily it for my technical analysis review for today. Of course, right now we're waiting to hear on some news from the EU Summit on whether or not they will agree to some type of detailed or structured plan on what to do to add more fiscal sustainability in Europe. And if they do agree on a plan, then this could mean that we can see a rally in the pair. But if they don't agree, if there's no detailed plan that they can agree upon, then this would mean more dollar strength, and we should see more selling in the pair. Sorry for that. But yeah, I just want to let you know, just be aware of the headlines. There's a lot of headline risk out there, and anything can shift sentiment in the market. But that's it for my technical analysis review for today, and I hope you guys have a profitable trading day on tomorrow. I'll talk to you guys later. Okay then, bye.